Let me start again by introducing myself. The name is Nadav. Working here in London, mostly in digital space, startups, working as an early stage investor and mentor for essentially very early stage companies as part of Entrepreneur First. Super interested about money. And you're probably asking yourself why the hell somebody that is dealing with early stage startups wants to give a speech about Bitcoin and about money. It's a very good question, and the answer is that I'm just very passionate about it, and I think that I have a couple of interesting things to share with you. I don't have any conclusive conclusions. I'm not an academic. I haven't written any papers. My idea is to share some thoughts and maybe provoke some ideas in your minds. So what will be the agenda? I will take you quickly through the history of money as we know it, the traditional story, something you can find in any textbook, any video, you can see it in YouTube, but I'm going to repeat. Then I'm going to present you with two simple, small problems that I think will be interesting to challenge the traditional view. I will then introduce an alternative view, try to address the two problems I presented in the beginning, and then, only then, we're going to speak a little bit about Bitcoin. So out of the whole presentation, just the end will present Bitcoin and some thoughts about it. So why do we even care? Why do we even care what is money? That's probably the question, because this is a Bitcoin meetup and I'm going to talk about what is money. And the idea is that by understanding money, which is first a very interesting philosophical question, people might be able to understand Bitcoin better. So the idea is to introduce money and then let anyone think about Bitcoin, and they can think whatever they want. I'm going to present my view, but anyone can have their own thoughts about it. Okay, so why won't we get on with it? Next. So what is money? Every traditional textbook will tell you that money is three things. Money is medium of exchange. I give you money, I get back something else. Money is a store of value, and I put it in quotation marks because what does it mean to store value, right? If one of you going to stuck on an island with a lot of pounds or dollars or yens, and there is no one else there, you cannot do anything with this money. So it's pretty weird to call money a store of value because it doesn't really store anything. But this is the textbook, and it's unit of account. If you want to compare apples and cars, if you want to compare ice cream and probably in London beer, you need some common denominator, and money is probably the best way to explain or to use in order to compare things. So this is quite simple. I'm not going to challenge it. And let's go to the story. So let's go to the next slide. And this is the story you can find in almost every I keep saying textbooks, but I don't think you're going to actually find this story in an official textbook. And that's the interesting thing. Nobody knows exactly how money came about to existence, but this is the story that we hear. So first there was barter. I had a cow. I wanted oranges. I was looking for somebody that has oranges and is looking for a cow. We exchanged, but it was very complicated because we didn't have the need at the same time, so we had to find something else to be an intermediary. So we looked for commodity that we can exchange and store. So people looked into shells, into feathers. People looked into big stones in the Yap Islands in Micronesia. People used all sorts of stuff as this commodity that they can use in order to transact and exchange valuables. And then they discovered that gold and silver or any other precious metals could be the best thing to do this activity of exchanging other stuff, because silver or gold or other metals are very durable, they're easily divisible, and a couple of other things that I'm going to discuss in just a second. And then something very interesting happened. People took their gold that was very valuable, they put it into the goldsmith to keep the gold for them because it was very valuable and they didn't want to keep it at home. The goldsmith gave them a note and people started to trade notes. That was another stage. So instead of trading specifically gold, people just traded notes that says, I have sort of gold or silver or any other precious metal with the goldsmith. And then the goldsmiths were very clever and they saw that actually people just trade the notes but they never come to claim. So the goldsmiths started to give notes without any gold backing it up. And this is the birth of fractional-reserve system. We know that governments then monopolized the management of that activity, and we have the national currencies. And then in our modern era in '71, Nixon cut the connection between money and gold, and now we have what we call fiat currency. Fiat is a decree, so it's money by decree. It's a great story, I'm not going to challenge it yet. Everybody accepting it as the common evolution of money. And then we have the last thing that is kind of internationally acceptable. If you want to go to the next slide, people talk about 6 things that are the qualities of the perfect money. Don't worry about the slide if you want. I'm going to post them later if you want to then look specifically those qualities, but I'm just going to go quickly. It has to be limited, because if it's not limited, if we're going to use sand as money, everyone can go to the beach, take some sand and fake money, so it has to be limited. It has to be fungible, and fungible means that you can exchange one bit with another. So my money and your money is the same thing. It doesn't have good money and bad money, or one unit which is good and one unit which is bad. It has to be durable, because if I want to save it for 20 years, if I want to give it to my son, if I want to give it to my grandson, it has to be something durable. So we don't want any money that's going to disappear and perish because of weather. It has to be divisible, because some items are very expensive and some items are very cheap. If I want to buy a car, I need a lot of money. If I want to buy a beer, I need little money. So the money has to be divisible. It has to be easily divisible. And it has to be transferable. I mean, if it's too big or too heavy or too inconvenient for me to carry, I cannot actually use it. So money has to be transferable. Now, the 6th quality, it's acceptable. It's something that I put under a line, because it's not really the quality of the money itself, but it has to be acceptable. Otherwise, it doesn't really worth anything. So even if you have something which is limited, fungible, durable, divisible, and transferable, if it's not acceptable, it doesn't work or not very practical. Anyone can think about an example of something which is very limited, fungible, durable, divisible, transferable, but it's not widely acceptable? Bitcoin. Bitcoin is probably uranium. I'm not an expert in uranium, but Bitcoin is the perfect example, right? It's super limited, super fungible, super divisible, transferable. But in this community, it's probably very acceptable, but in the wider world, it's not acceptable yet. Yes, no, I don't know. So this is the story. And let's leave it at that. Let's move to the next slide. And before we're going to come up, I'm just going to show you 2 interesting questions that maybe going to challenge the story I just presented. There are many other challenges, questions, irregularities, inconsistencies. I just picked up 2 in order to make a point. So I'm not claiming that these are the only 2 problems with my story. So let's go to the first one. Yeah. So the money that, the most advanced money in the world, or the most advanced money in history, or the latest level of evolution in money is fiat money. It's the dollar, it's the pound, it's the yen. These are fiat currencies. And I just said, and we all agreed, that money has to be limited. But how come that credit money, the money that we're using, is ever expanding? If we say that the perfect money has to be limited, how does the money that we're actually using is not limited? Money is ever expanding. I mean, we know it intuitively. We know that central banks are printing, so to speak, money. And we know that both under the gold standard, so if anyone thinks it's because the breakage of the link between gold and money, it's not the reason. Even before they broke the link, money was ever expanding. So you can look at the graph. This is a graph of the monetary base of the US from the 50s until 2008, and you can see that it's ever expanding and growing. So how come, if we say that money has to be limited, how come the money we use is not? Is it a fraud? Is it a problem? It's not. Let's think about it. The next thing is the interest conundrum. If any of you is interested in money, you probably have seen this super interesting question. It's pretty subtle and complicated, so I'll try to explain it. So assume you want to buy a house, the bank gives you $500,000 of a loan. You take a 30 years mortgage, and you pay back the principal, and you also pay the interest. So let's assume you paid in total 1 million back. So the bank takes your initial loan of 500, he writes it off, and he's left with $500,000 of profit. But where this profit is coming from? Yeah, but who's going to finance this interest? I mean, if everybody will take loans and pay interest, where is this interest coming from? Pretty weird. you're kind of right. Your intuition is true, but I just want to show the conundrum first on the balance sheet before we jump into the answer. If you want to go back one slide, so sorry, forward one slide. Another one. Yeah. This is a bank balance sheet. You have the assets and the liabilities. Let's say that I started a bank. I have $10 million in cash, putting as my assets. I have $10 million in equity. This is my bank. And once somebody comes and he wants to take a mortgage, you want to go next slide. What's happened is that the bank, and don't challenge me on that because some people find it really weird, but the bank just expand the balance sheet. That's what happens. They just put on the asset $500,000 loan, and then on liability they put $500,000 as a deposit, and this deposit is my cash. But on the balance sheet of the bank, it just expanded. It used to be 10 million, now it's 10.5. And I pay back the interest. So let's go to the next slide. So during the 30 years, I paid the interest. Everything got expanded. So now we are on $11 million of a balance sheet. And when the loan was paid in full, let's go to the last one. I wrote off the initial loan. And I left with a bank with $10.5 million balance sheet. And this is my question. How come the bank had 10 million in equity and suddenly has 10.5 million in equity? Where this $500,000 come from? It's weird. Who printed? Who printed it? It's a good intuition. So somebody said they printed it. And so this is the answer, by the way. But let's wait with that. Bitcoin star. This is a conundrum that you can find on the internet. A lot of people asking this question in blogs. People ask, where does interest coming from? A lot of people getting very radical and say that it's a fraud. Banking are ripping us off. How come they also give an interest? You have all these images of the labor man with the big metal ball, and this is the interest. So it's interesting. So let's go to the next slide. So we have two questions that I posed. I said why credit is ever expanding, and I asked where does interest come from, which then leads me to the third part of this presentation, which presents an alternative view of what is money. It's quite conceptual, and don't worry about it too much, but I will try to make a claim at the end that will help us understand the answer that was already been shouted here, that the bank's actually printed this interest, and I actually think it's good. I don't think it's a problem. I'll just try to explain why. So let's go to the next slide. So money is a concept. That's something that I'm claiming. I think it's not a thing, it's just a concept. It's a social concept of transferring purchasing power. So I have money, I have purchasing power. It means that I go within the economy and I can take something from the economy. This is a purchasing power, but it's transferable. What does it mean? If we are a clan and I went and I hunted a cow, and I brought the cow to the clan and everybody enjoyed the cow and ate it, you all respect me. And you're going to say, Nadav is the man, he brought us a cow and we owe him something. So I have a purchasing power over this economy. But the concept of transferring it, that's the innovation, right? I can take my purchasing power and give it to Louis. This is something quite unique. And if you want to go to the next slide, you know what, let's go to the next one. It's very much so like language. Money is like language or communication. So communication, it's a concept, and language is a tool that enables us to transfer messages. And I'm going to give you an example. So let's say I want to communicate for someone of you to leave the room. If I don't have a language, I don't know what's your name. I don't know your name. Sam. So I don't know Sam. I don't have a language. But what would I do? I would just go. I'm going to push Sam. No, don't go. But just for the example, I'm going to push him out of the door. He's probably going to get the message, right? My message was leave the door. But how can you transfer this message? How can I give the message to Sam, or how can I give the message to all of you at the same time? I need some innovation. I need a tool. I need a language. And the language is the tool that enables this whole concept of transferable messages. And if we go now one slide back, currency is the tool that enables you to transfer purchasing power between people, right? You need something that will symbolize this purchasing power. So people used a lot of stuff, right? I mean, they used silver or metals coins. Bitcoin could be something like that. The dollar. This is a very small picture, but it's actually a huge stone that we discussed in Micronesia. It's something as tall as I am, and people used it in order to symbolize purchasing power. This is a bird from Guatemala. It's called the quetzal, and this is a very rare bird. And you see the tail. It's a very interesting tail. So people use this very rare symbol in order to transfer purchasing power between one another. Check is an example. So money is a concept, currency is a tool. It's like language. We can go next. Next, that's here. So just a couple of examples to make the point. If you think about currencies, you can think about commodity currency, cryptocurrency, credit, which is a fiat currency. They're all currencies. And in order to transfer them, you need to make a payment. It's the same thing like in languages when you have human language or computer language, and then you need something in order to transfer those messages. So let's go to the next slide. So money is a concept, currency is the tool, and people speak, and a lot of time they mix payments and money. I just want to make the point that payments innovation and money innovation is not the same thing, in the sense that money, like we said, is the concept, and payment is how do I transfer one currency unit from one person to another person, or from an agent to an agent, right? I mean, we're talking about Ethereum, we're talking about computers paying each other, so agent can transfer currency. So if I have a note of 20 pounds, and I give this note to, I'm going to pick on Sam, because I know his name, and I'm going to give him the note. So the money was a fiat money, a credit-based money. The payment mechanic was something very old and basic. I just gave him something physically. But if I'm going to make a bank transfer of 20 pounds to Sam, it's going to be the same thing, right? I mean, the money will be the pound, which is the same kind of credit money, payment money, but the mechanism would be digital transfer. So the innovation was on the payment, but the money is still the money. And why it's important? Because I want to focus on the money innovation and not on the payment innovation. Because Apple Pay is payment innovation. What is Bitcoin? Maybe we'll talk about it in a second, but it's two different things. Payment innovation, money innovation. It's very important to remember it. So if we go back to the history that we presented about this barter and the commodity money and the notes, and then we talked about those, do you remember those goldsmiths that started to give these notes, and then they wrote the notes without actually having any gold in the vault? This is innovation. This is money innovation. That's where money moved from commodity money into credit money. If you want to go back, forward, sorry. I'm not very good with backward and forward, confusing me. We use interchangeably the words credit and money, but it's not the same thing. Credit is an innovation to borrow from the future. Okay, we're moving purchasing power from the future. I give you something I don't even have, because I trust you that with your powers and endeavors and entrepreneurship spirit, you'll be able to create something and pay me back. Essentially creating money out of nothing. So those are the goldsmith in the example, and these are the banks of our time. They create money out of nothing. Do you remember the balance sheet? And it's okay. It's innovation. It's amazing. I'll try to explain you why. But this is the big innovation. The move from commodity money to credit-based money, in which people created money out of nothing, and the money that we're using, pounds, dollars, yens, ruble, maybe soon Deutsche Mark, whatever it's going to be, these are all credit money. This is money that is based on loans from the future to the present. I know it sounds maybe a bit abstract, but if you think about it, it's actually that's what happens, and that's what we're using as the de facto money. If you're going to go to the next slide. So what is interest? Have you ever heard the term seigniorage? No? You never heard the term? Some heard, some not. So this is the extract from Wikipedia. I'm gonna read you the explanation of Wikipedia, which I think is incomplete, and then I'll try to say a couple of words about it. So Wikipedia says that profit made by a government by issuing a currency, especially the difference between the face value of coins and their production costs. So essentially, seigniorage is pretty clear. If I'm the mint, I'm working for a king, right? I mean, let's go back a couple of 100 years. I'm working for a king. I'm the guy that's minting the coins. I want to make money. How do I make money? I take a little cut. I get 1 kilo of gold. I mint coins, and I keep 5%. That's my salary. That's my profit. That's my seigniorage. So every entity that is producing money, whether it's commodity money or credit money, it's like the cat that sits close to the milk, right? I mean, they also want to make money, and they take a cut. It's called seigniorage. You're going to find it in any type of money, in any story of history. If you haven't looked for it, you wouldn't see it. But if now, when you know about it and you think about seigniorage, it's in every type of money. And actually, the word itself is derived from the power of the sovereign over the subject, in the sense that you can actually make some profit or earn some whatever purchasing power or money just by being the guy that administers everything. So interest is a very, very, very sophisticated, tricky, elusive form of seigniorage. And I'll show you in a minute why. But it's okay. I'm not against it. I mean, money has the best example, I think, is like a car. If you have a car or an airplane, you have a tachometer to measure your speed. So the device itself that measures the speed has value, but it has nothing to do with the speed itself, right? I mean, if I have a Ferrari, I drive really, really fast, and I see that I'm driving now 150 miles per hour, the meter that shows me that I'm driving 150 miles per hour doesn't have any contribution to my speed. But it's helpful, right? Because especially if I'm flying, I know how to land, how to take off, etc. So there is a value for the measurement, but it's not part of the thing itself. So having money in an economy is very valuable because we're using it, but it doesn't necessarily contributing per se directly. But the person that administering it, or the entity, or the body, they need to make money. And their money is the seigniorage. If it's commodity money, they take a cut. If it's credit-based money, they take interest. I'm sure that you've heard about have you ever heard about the word debasement? When the government is debasing the currency. Have you ever thought where this word is coming from? So, if you think about long back, maybe in the Roman times or Middle Ages, when we didn't have credit money, we just have commodity-based money. So the sovereign, whenever they wanted to take a big cut of seigniorage, they debased the base of the coin. I mean, maybe the coin was based over gold, maybe 100%. If they want to take a seigniorage, they would take all the coins. They would put 90% of the coin in gold, and then 80%, and then 70%. So this is debasement of the currency. In essence, they took seigniorage, and sometimes they took too much seigniorage, and then it's a different story. But if you're going to look and analyze or read about the collapse of the Roman Empire, for example, before the collapse, it's not 1 or 2 years, it's talking about tens of years, there was a big debasement activity of the government trying to extract and exploit the system, take too much seigniorage, and then money lost its value, then they couldn't pay for the soldiers, and the empire collapsed. So this is interest. If we go to the next, and essentially we are now in a world that we're using fractional reserve system. All the money that we're using is based on credit that is given by banks, that is creating out of thin air. The interest is the seigniorage of the banks, and it's awesome. If you're asking me, I think it's a very good system. It works. It's quick. It allows people to get assets, to get resources, to borrow, so to speak. It's not really from the future, but to borrow, and we're not limited by amount of money in the system. We're not limited by gold that is stuck or is being hoarded, etc. It's a very deep innovation that driven a lot of the improvement of society in the last couple of 100 years. Let's go next. I went fast. I'm aware of it. Again, if you want to have the slides, we'll talk about it later with pleasure. But the idea that I wanted to present is that money could be anything, and that credit is a very interesting innovation of money. Fractional reserve is a very interesting innovation of money, and it works. And the seigniorage in the system is the interest. So let's answer the two questions that we presented. So in terms of why credit is unlimited, so in essence, as long as the increase is reasonable, as long as the guy or the agent or the sovereign that's producing the money is taking a reasonable seigniorage, everything is stable, because we intuitively, and I cannot prove it, but my hunch is it's somewhere between 4, 5, 6%. When we know that the sovereign is taking this amount of seigniorage, the economy is stable, everybody is okay. But the minute that either the sovereign or its agents taking advantage, trying to take too much seigniorage, usually the system is collapsing. Now, there is a famous book, if you want to go to the next slide. It's called The Collapse of Complex Societies. This is a book that has been written by a very renowned academic. You can read about 33 complex societies, and complex societies are societies that, like the Egyptians, Ottoman Empire, Roman Empire, and you'll be surprised to see that somewhere between the heights of this society and its collapse, there was always some kind of fiddling with the money. Somebody was debasing too much. Someone was taking too much interest. Somebody was exploiting the system. Currency lost its value and the system collapsed. So my point is essentially that interest is okay, and the fact that the supply of credit is ever increasing, it's okay as long as it's reasonable. Do you want to flip back a couple of slides to see this slide of the American money supply? It's wide back. I don't know if it's reasonable or not. I'm not a prophet. I'm just saying that I think that we see that as long as the seigniorage is reasonable, everything is sustainable. The minute we think or suspect that the sovereign or its agents are exploiting, because I'm saying repeatedly agents, because the entities that are actually producing money are not the central banks. These are the commercial banks, like in the example. As long as they're not exploiting, everything is okay. When they exploit, thing collapses. I'm not here to predict, because I really don't know if this is exploiting or not. Let's go back to the end, or forward to the end, and look at the second question of what the hell is this interest. And I think you're going to like it. I'm sure that a lot of you are very numerical, analytical. So let's go back to this example of the bank and the mortgage and the 10 million. So let's assume that the entire economy, do you remember this bank with the $10 million balance sheet and the mortgage? Let's assume that the entire economy has 100 million of money, of purchasing power in currency. Let's go one next slide. Remember this bank? After giving the mortgage, getting it back, writing off the loan, being left with 10.5 million. Now let's look at the mathematics. That's interesting. Next slide. So before the activity, in the entire economy, we had $110 million. The bank owned 10. So in essence, it had 9.09% of the purchasing power, right? I mean, the total purchasing power is 110. The bank had 10. I have 9.09% of purchasing power. After giving the loan, the bank had 10.5, and the entire economy had 110.5. So if you look at the math, and it's very simple math, the bank had 9.5% of purchasing power. So the bank had made profit. And if you just look and subtract the numbers, the difference is 0.41% of profit, and this is the seigniorage. So instead of cutting this coin and taking 5% of the gold, the banks are producing, and you guys said it, the banks are producing more money, keeping it, and essentially redistributing the purchasing power of the economy, redistributing the purchasing power, making profits. It's super sophisticated and super cool, actually, when you think about it, in my opinion. It's very neat. So let's go next. And before I'm going to go there, so I shared with you some thoughts about the history of money, about problems, about the different way to think about it, and my whole point was that the system works with credit. That was my whole point. This whole presentation is about the fact that the system works with credit. Credit is, in my opinion, good. It's interesting. It has interest, which is the seigniorage in the system. So why does it matter for Bitcoin? Let's go to the next slide. So what the hell is Bitcoin? So according to this view and according to the way I see it, I think that Bitcoin is probably one of two things. It's probably an asset, somewhat like digital gold, assuming that the tech works. I'm not a computer scientist. I just assume that the algorithm works and nobody can hack it and we don't have quantum computers, etc. So it's either an asset, like a commodity, or it could be both, a very, very sophisticated payment system. Again, assuming that the tech works. And those two things lead to the next slide. So what's going to happen? So Bitcoin could disappear. I believe that it won't, but it could disappear. I mean, somebody could crack the algorithms. It could be just a failed experiment leaving us the blockchain. Maybe it will, maybe it not. I don't know. It could stay as a digital gold. So ask yourself, why do people have gold in this economy? Some people say because they want to make rings and earrings, but it's not entirely why we have gold in the economy. So maybe it's going to be just the digital equivalent for gold. Maybe it's going to be base money. Remember in our example, we talked about the goldsmiths and the base money. So the whole credit system that I described needs some kind of a base. You need some reference point, even if you then cut it at some point. So maybe Bitcoin will be the next very sophisticated base money. That's a very interesting thought. So base money usually is about 5% of the entire money supply of the economy. So maybe Bitcoin, if any of you want to try calculation to predict how much Bitcoin worth, so if you can use scenario number 3 and think about Bitcoin as a new base money, maybe it will impact your models. So it could be that. It could be just a clearing system. So the blockchain could think about Coinbase, the company. Think about Circle, the company. Think about Zappo, all the companies that we know that deal with Bitcoin, and now they just, like those goldsmiths, they keep our Bitcoins and they give us receipts. Maybe they will start to create credit. Maybe they will start to build and expand credit system on top of their base Bitcoin. But whenever they want to transact with one another, they need to really move the underlying asset. So we could use Bitcoin as a clearing system, and this clearing system actually could also maybe use offline transaction. Real banks, HSBC, Barclays, when they want to clear transaction between one another, they use now clearing system. These are profit-making machines. Anyone that invests in the stock market know that companies like CME or LSE, they're making tons of money just clearing and settling between the major banks. Maybe those banks can use, maybe this is what our three are trying to do in the consortium. I don't know for sure, but maybe that would be the future of Bitcoin. Maybe it's going to be a reserve currency. Nations have their own currencies, but then they want to transact with one another. They need some common denominator. These days it's the dollar. But it's problematic because the US can tell you, you should not deal with country X. You should not deal with country Y. Maybe Bitcoin will be that very simple to transport asset that will enable countries and nations to transact with one another. Maybe it's going to be a global currency. Maybe we're going to see something like Google for money. So we are going to have one system based on just Bitcoin. I don't know. Maybe it's going to be global currency, but only for the internet. Maybe every transaction on the internet will use Bitcoin, maybe with credit, without, not sure. Maybe it's going to be shadow currency. So people will just going to use it for illicit activities, for buying drugs, for buying weapons, for paying for things in the margin of society. And maybe it's going to be something else. I don't know for sure. But my conclusion is the following. If you're going to go to the next slide, I think there is good news and bad news, at least for me as somebody that's very interested in the subject, and maybe for you guys, probably some of you holding Bitcoins, interested in the space, working in this space. So I think that the good news is that Bitcoin is real. It's real. It's innovative, it's real, and it's probably likely to play some kind of a role in the future of finance. I don't know exactly what role. Is it going to be the base currency? It's going to be a clearing system. It's going to be a payment system. It's going to be something else. So but it's likely there is something there. It's meaningful. It's real. It's not just some kind of fata morgana. But probably the bad news, at least, or I don't know if it's bad news, but Bitcoin is here to stay, but fractional reserve system is here to stay as well. Fractional reserve system is an innovation. It's not a fraud. It's not something necessarily bad. It could be abused, and it has been abused in the past, but this is the biggest innovation of the financial system in the past 500 years, and it's here to stay. So even if Bitcoin will be the next base currency or asset or whatever, we're going to see on top of it a huge system of credit. We're still going to have people making decisions, credit officer. We still want to borrow from the future. In order to borrow from the future, you need people to make those decisions, or algorithms, or Ethereum, or computers. I don't know exactly what. So I don't think that Bitcoin is the answer for everything. I don't think it's going to save the world on its own. And just to leave you with one last thought before we finish, so it's the last slide. As somebody that's really obsessed with what is money and monetary policy and payments and currencies, I just want to kind of say that progress in general is driven by people, by entrepreneurs, by the human spirit, and not by increasing some sort of money supply. So money on its own cannot solve problems. It cannot invent new things or new companies, new systems, new social orders. That's it. That's the last slide. I can go to the thank you one. Yeah, thank you.
I think Nadav is agreed to do some questions and answers, so if anybody has any questions for him, if you'd like to stick your hand up and I'll come grab you with the microphone. That kind of works.
Thank you. Sure. My question was, you said it could be used as a currency, as a perfect currency maybe, but they say that Bitcoin is limited in number. It can only reach 21 million, if I'm correct. So how would you go about using that?
Excellent question. Personally, I don't think it's going to be the perfect currency. I think it's going to be some sort of a base, either currency or based asset that on top of that you're going to have a fractional-reserve system. But some people predict that something new will emerge and those 21 million Bitcoins will be able to be divided almost to infinity. At the moment, one Satoshi, it's 100 millionth of a Bitcoin. So in a sense, they say that instead of kind of increasing the supply, you're going to decrease the supply, but it's always going to be useful. Personally, I think that it's missing the important bit of credit, which is essential for modern economies. I don't think it's happened, but it could. Maybe something that we haven't seen before will happen. So I'm not too predict, but my personal view, I'm supporting or believing that some sort of a new fractional reserve system will be emerging.
Yeah, thanks for that, Nadav. Do you think that the major financial institutions that you said sort of came up with fractional reserve banking will eventually start to try and use Bitcoin for their own purposes? I know they're quite derogatory about it at the moment and focusing on blockchain, but do you have any feeling that they'll come back to Bitcoin, a public, completely open blockchain with a currency inbuilt?
Yeah, I think this is it's a great question. Personally, I think that yes. I think it will take a lot of time, and I don't think that they will take all the assets that they have and will change it with Bitcoin, but I think slowly, little by little, maybe one government, maybe Malta, maybe some island, maybe Venezuela, maybe Argentina, they will look for some kind of asset to build upon their own new currency. Maybe Argentina would like to introduce a new national currency, maybe Venezuela, maybe they will accumulate some Bitcoins in order to get something stable. Maybe in 10 years after people see that it's actually here to stay and it doesn't collapse and it's not been hacked, etc. And if government will do it, maybe then institutions will start to accumulate, maybe very rich financial individuals. I know that a lot of family offices, I know that some hedge funds are starting to accumulate slowly and quietly some Bitcoins. They try to experiment to see as an asset. So I think that's sort of thing that I can see happening. And then maybe they will start to use it in order to clear. So at the moment the fashion is to talk about blockchain and not to mention Bitcoin, and it's a lot of PR. They don't want to be associated with something that of the shadow, but we know that every technology, even like video, we all know where video started in the internet, so it also came from something which is a bit on the margin, but maybe the same thing will happen with Bitcoin. It will start with illicit activity, people will start to experiment, coming mainstream, but don't have a clue when and how exactly it's going to happen. Thank you.
Hi. In Britain, who exactly is creating money? Is it Bank of England or any commercial bank? And if it is any commercial bank, then there has to be some central authority which authorizes creation of money. And how do they do that, if you know?
Super question. If you're really interested, there is a book. It's called Where Does Money Come From? And it's a book by a professor, economic professor, very renowned, sitting in I think it's in Bournemouth, I cannot pronounce the name of the city on the coast. And he researched exactly the answer to your question. So this is the real good accent. So to answer the question was where does money is being created in the UK economy. By the way, the Bank of England also produced 2 papers about where does money come from. That answers they produced it 2 years ago. So also you can look in the website. The answer is money is created through commercial banks, exactly like you said. So remember this balance sheet that we showed in the presentation. So if a bank has 10 million, they want to give a loan. It's not that they take some of their cash and give it to somebody. They're just bringing on top of that. The regulator, which is the moment is the FCA and the Bank of England, they give the ratio that is allowed in the economy to lever. So if you have 10 million and the ratio is 10 times, so you can give or create money up to 100. So this is kind of how they control the amount of money in the economy. They can say you can lever 10 times, 15 times, 20 times. That's how money is being expended and decreased. It could be abused because it's very hard to really understand what is the base you're starting with, and many times it is being abused. Did I answer? Yeah. It's a very good question. I think it's one of the most confusing thing in the financial system. In essence, the sovereign, which is the government of the UK, outsourced the task of creating money into commercial banks. And then, about 400 years ago, the first country to introduce a central bank was Sweden. And then I think the second one probably was the one in England. They created another entity to regulate and control those commercial banks that was creating money, because it's in order to make a point of separating the government itself and the creation of money. So, but the system itself was outsourced by the sovereign to commercial banks. I just want to talk one more thing about it because it's fascinating. So this guy that wrote this book, he actually went and made a research. He was actively going to commercial banks and asking them, I want a loan of 200,000 euros. I think that was the number he used. You can Google it, and his name is Richard something. I don't remember the name. But he went to banks all across Europe, and he was asking the bankers that he worked with, where did you take this 200,000 euro that you gave me? And they didn't know. They didn't know that they created that. So if you're going to ask bank managers, these are commercial people. They're not academics. And so they don't know that actually they created. They think that somebody put a deposit, and then they give it as a loan. But it doesn't work like that. It's really interesting.
Maybe it's connected to this in a way. What do you think, what is your opinion that can play Bitcoin in the coming credit crisis? I mean, the crisis that might sooner than later come, comparable to the 2008, which is connected also to the creation of credit that is gone pretty wide. What do you think so the Bitcoin can play?
I'm not an expert in this. I just want to say up front, I'm not expert in kind of the mechanics of the public markets, and very hard to predict when the upcoming crisis will unfold. But I think it's connected to the first question that you asked, I don't know the name, but of how the adoption of Bitcoin will happen. So maybe the next crisis, when money is, for example, maybe dollar loses its value and people are fleeing into other alternative currencies, maybe like gold, maybe like Bitcoin, then some kind of hedge funds are coming out and saying, okay, we made a killing because we invested in the Bitcoin and now it's stable and its purchasing power is high. So maybe it will accelerate the adoption of Bitcoin as a currency, maybe for the blockchain as a technology, but I don't know exactly. I don't think it's going to prevent it. I don't think it's going to save the world. So I think I think that the crisis in 2008 was very good in accelerating the adoption of e-commerce. I don't know if you remember, so a lot of companies went bust, and then the commerce, which is more light, went into the mainstream. So maybe the next crisis will introduce. Maybe not. Thank you.
Can you hear me?
Is there an area or a technology or a country where Bitcoin is being used from end to end as far as possible? About 7 or 8 years ago, I built a GPU-based machine to do Bitcoin mining. I had to spend money in dollars. Is there an area or an industry where people are saying, yes, I'll buy this service for so much Bitcoins and I'll deliver it. Someone else will buy it for so many Bitcoins. Is there anything that stands out that's obvious?
I don't know for sure. I think that we can, after when we finish, we can probably ask Tomer, which is probably one of the most knowledgeable people of what actually really happening. Tomer, you want to put your hand up? So we can ask Tomer later. I think that you don't think there is. Yeah.
So online gambling with Bitcoin, the developers are paid in Bitcoin, the product is Bitcoin related, the customers are paying in Bitcoin, so that's probably the only experience.
How about developing blockchain for Bitcoin, where everyone from start to finish says to the bank, we're going to charge you in Bitcoins, we're going to get paid in Bitcoins, because Bitcoin's blockchain is where it's going, and we're going to charge you Bitcoins.
So I don't think, I don't know of any place besides the world of online gambling, Bitcoin-based gaming.
So here's an idea. Let's start it and say, hello, Mr. Bank. We're going to charge you so much in Bitcoins, and for the following project in Bitcoins, you've got to pay us in Bitcoins. Wouldn't that be nice?
We should do that.
If I may, just one thing about that. So I think that, at least for my observation, the problem is that the same way you use now pounds, and you want to move from pounds to Bitcoin, it's like moving from pound to gold. And and my point is that as long as we don't have credit creation on top of Bitcoin, what you suggested is not possible. And my prediction is that a company like, and this is my biggest kind of thesis, is that a company like Coinbase at some point will start to issue credit. So instead of trading the actual Bitcoin off the blockchain, they will start to give you credits for Bitcoin, and you're going to start to have an economy.
That's the guy's approach. And say, we'll do this project for you, but we'll charge it in Bitcoin, and we'll pay it in Bitcoin. Maybe pay for Bitcoin. Maybe pay for Bitcoin. That's what I'm saying.
Any more questions?
Hi. I don't know whether you are familiar with the current state of Bitcoin, but do you have an opinion on the block size debate?
I do. I do. So I'm not a computer scientist, so it's very hard for me to understand in depth the mechanics of the limitation. But my view is that because I am a strong believer in the fact that we're going to use credit, and that credit money will be the money prevailing, even if Bitcoin will be the base, I almost think that it doesn't matter. Because I think that at the end of the day, even if Bitcoin will be the backbone of the financial system, on top of that, you're going to have still entities giving credit using centrally clearing houses. So I can imagine Coinbase, I'm just giving them as an example because they are the prominent Bitcoin wallet at the moment. I can imagine them giving you as a merchant and me as a client credits, but doing nothing on the blockchain. So the more it's going to grow up, then the size of the block, that to me it doesn't really matter, because who cares how Coinbase and Circle are actually clearing their net on the blockchain. That it's not urgent. But us, just kind of day-to-day consumer, we're going to transact with centrally administered entity. So that's kind of my thesis, and that's why I think it's going to be that size or that size.
Oh, thank you. Okay, so credit is only as stable as those who wield it, like a gun is only as safe as those who wield it. So if you take it like this, you can't stifle human greed. that's a universal constant. It's a natural psychological process in our behavior. Everybody wants 3 deers instead of 2 deers to take back to the cave. So yeah, I'll just complete my question. 2008 was the climax of this greed, and the banks were bailed and legitimized a broken financial system through our politics. The system, this broken financial system which has been legitimized, is embedded into our laws, our politics, and our way of life, for better or for worse. So do you think Bitcoin will be embraced by financial institutions and legitimized, or choked to death by regulation in order to preserve this problematic status quo?
I think it's also a very good question. And first of all, we don't know that the system has really collapsed yet. Maybe we think that it collapsed in 2007, and maybe the bigger collapse is about to happen. And I think I want to refer again to this excellent, it's very hard to read, I have to say. I didn't finish the entire book, but The Collapse of Complex Societies. It's a fascinating story of complex societies and their collapse. So maybe we are in an era of a complex, very complex society that is about to collapse at some point. Maybe we haven't seen the collapse yet. Maybe they, as you said, it was bailed, and maybe it will collapse again at some point when the dollar will really lose its value and people will stop believing in that. I don't think that Bitcoin can save or prevent it. I think that maybe financial institutions will start to adopt it after the crisis, to use it as the new, like we spoke about, crisis accelerating adoption of new technologies. In terms of regulation, I think it's very hard for regulators to fight Bitcoin from 2 reasons. One, it's too small at the moment, so they have too much things on their plate. And second, I don't think that it's a problem. Even if I don't think they would necessarily want to regulate it or crush it. Why would, I don't know, the UK or the US want to crush Bitcoin?
Let Nadav have a drink, or any more questions for the man?
Pleasure.
Drink. Thank you, Nadav. Thank you very much.
Thank you very much for listening. I really appreciate your patience.